the stock market. Let's just talk about some things historically. So let's just say last October, that was your low. Coming out of that bear market low, the first year, this has been really record-breaking stuff. One of the lowest ever for the S&P 500, only up 22%. There was only 1 year where it was worse than that, lower than that again. But some of these, the worst ever for the Russell, the worst ever. You hear us talk about that. The worst ever for the New York Composite, the worst ever. Dow Jones Transportation, one of the worst ever, the second worst ever. S&P Financials, we just talked about the financials, one of the worst ever. I'm sorry, the financials, the worst ever. And, of course, the bank index itself, the worst ever. So, I mean, coming out of this so-called first year if it is a bull market, it's been pretty sloppy. So here's the question. Is it a red flag, or does it mean a chance to make even more money? I'm going to bring in Banrion Capital Management CEO, Shana Sissel. Shana, welcome. It's been a while.
Yes.
Let's talk about some of these things, because I know you're focused on that. Let's start at this end of the table.
Yes.
Banks and financials, really sloppy. The worst year, first year coming out of a bear market ever. Is this a good thing or bad thing?
I'm a little concerned. The banks have all kind of noted, especially the regional banks that rely more on lending activity, that there is no demand for lending because people don't want to pay the higher rates. Right. Now, that is a major part of their earnings, so that is going to continue to weigh on the banks. I think if we see more certainty in where interest rates are, and we know that the Fed is done, we may see an increase in demand. But until that point, I think consumers are staying away from increasing debt levels.
The Russell 2000 small caps, everyone's wondering. So coming into the year, historically, coming out of these sort of economic environments, the Russell leads, right? So almost everyone, last October, last November, December, January, almost all the guests said, you got to own the Russell. Well, if you own the Russell, you're trailing big time. Is it a buy situation or is it a red flag?
I think this is a red flag. I'll tell you why. The non-earners in the Russell 2000 are near historic levels. The non-earners in every index except for the Russell 1000 value are at concerning levels. So that, for me, is a red flag. I think there's some concerns there, and I do think we're going to have to see an earnings trough, and I'm not sure we're there yet. I think that we're too optimistic at 12% for 2024. Right. We need to see an earnings trough, and I do think we need to see some economic softness before I'd be in with the Russell.
No, it's interesting, too. One of the things I've always worried about with the Russell 2000s, when the company gets good enough, they graduate it.
Yes.
So it's always saddled with, and of course, with higher rates, these companies are going to struggle when it's time to refinance, and some of them may not be able to.
Yes.
Let's talk about the things you like right here. I just picked out some of the names. At the top, we got Caterpillar. With the strong dollar, doesn't that hurt them a little bit?
I don't think so. As your previous guest pointed out, we have infrastructure programs of which Caterpillar would be a huge beneficiary of. So Caterpillar, for me, is a buy right now. Whether or not they get business from China is not that important, given that they will have higher demand here.
I got a minute to go, and I want to get to another list. But real quick, Nvidia, rough sledding the last couple of sessions. It looked like it had regained its footing, but, of course, the Biden administration is saying, no, you can't sell these high-end products in China. Is that an issue for you longer term? Would you hold the stock through this?
Yeah, I'd hold the stock through this. As a matter of fact, I'd be a buyer on weakness. Very good company. Very strong balance sheet, has more cash and could pay off its debt tomorrow and still have tons of cash on its balance sheet. Right. Demand isn't going away. That is a well-run company with absolutely no competition. So I remain a buyer, and I know everybody gives me a hard time about that.
No, that's okay. I'm in it too. Liquid alt. So we're in it together.
Yes.
30 seconds, though. Why is this such an attractive investment at this time?
I think we're still going to have fixed income have volatility. If you want to have a defensive positioning in your portfolio to protect on the downside, liquid alts are going to provide you that more than fixed income would, because fixed income is going to continue to be correlated with equities and have that volatility, I think, and not going to provide the protection that it has in normal conditions.
All right, great stuff. We covered a lot.
Thank you.
It's great seeing you again.
You too.